Hello everyone, today I want to talk to you about the confirmation from the Ministry of Commerce that the United States is seeking to engage in trade negotiations with China. Additionally, China has the highest number of nuclear power plants under construction in the world. The effect of investment-driven economic growth is back. According to the Ministry of Commerce's website on May 2nd, the spokesperson answered questions from reporters regarding the China-US economic and trade dialogue consultations. A reporter asked, recently, the US side has repeatedly stated that they are about to negotiate with China on trade issues and will reach an agreement. Does the Ministry of Commerce have any further news or comments? The Ministry of Commerce responded that China has noticed that the US high-level officials have repeatedly expressed their willingness to negotiate with China on tariff issues. At the same time, the US side has recently proactively conveyed information to China through relevant channels, hoping to start talks with China. In response, China is conducting an assessment. The Ministry of Commerce stated that China's position has always been consistent. If you want to fight, we will fight to the end. If you want to talk, the door is open. The tariff war and trade war were unilaterally initiated by the US. If the US wants to negotiate, it should show sincerity, be prepared to correct its wrong practices, and take action on issues such as canceling the unilateral tariff increases. We have noticed that the US has recently been hinting at adjusting tariff measures. China wants to emphasize that in any possible dialogue or negotiation, if the US does not correct its wrong unilateral tariff measures, it shows a complete lack of sincerity and will further damage mutual trust between both parties. Saying one thing and doing another, or even attempting to use negotiations as a pretext for coercion and extortion, will not work with China. The Ministry of Commerce's statement has several key points. First, the US has recently, through various channels, repeatedly conveyed information to China, expressing a desire to negotiate with China. This indicates that the US is taking the initiative to seek negotiations with China. Second, China is currently assessing this. This shows that China has not closed the door to negotiations. Third, China believes that if the US wants to negotiate, it must show sincerity, be prepared to address the issue of lifting unilateral tariffs, and take action. This statement warns the US not to say they want to negotiate while engaging in underhanded tactics. In fact, China has always been preparing on two fronts, especially preparing for a long-term tariff and trade war with the US, aiming to minimize the impact on its own economy, while also draining the opponent, thereby enhancing the effectiveness of the tariff war. This way, negotiations can be more advantageous for our side. Because there's no rush to reach an agreement with the other party, negotiations can drag on for a year or more. Whoever is more anxious will concede first. Since early April, the intensification of Sino-US trade frictions has naturally been unfavorable for Chinese exports and will drag down economic growth. How significant is the impact of the tariff war? We can look at the first important macroeconomic indicator for April, which is the recently released April Purchasing Managers Index, PMI. This figure shows the cooling of the Chinese economy over the past month. In April, the national manufacturing PMI was 49%, a decrease of 1.5 percentage points from the previous month. The final PMI value is 50%, which is the threshold between expansion and contraction. A value above 50% indicates economic expansion, while a value below 50% indicates economic contraction. China's economic slowdown in April was quite significant because the PMI in March was 50.5, but it dropped to 49 in April. The lowest value in recent years appeared in December 2022, when it was only 47%, due to severe disruptions from the pandemic at that time. Another low point occurred in April and May 2023, when the PMI slightly dipped below 49. This was because, after the lifting of pandemic controls in the first quarter of 2023, the entire economy, including real estate, experienced a strong rebound, but it quickly fell back. At that time, the PMI also quickly retreated from its peak. Let's take a look at some specific data from the April PMI. The Manufacturing New Orders Index was 49.2%, which is a decrease of 2.6 percentage points compared to the previous month. This indicates a rapid decline in manufacturing demand. From an industry perspective, the indices for food processing, alcohol, beverages, tea production, and pharmaceuticals were above 53. This shows that these tax-related industries are minimally affected by trade frictions and continue to expand. However, the indices for textiles, clothing, and basic products have significantly declined. These sectors are key industries for China's exports to the United States and are closely related to Sino-US trade relations. Apart from manufacturing, let's also look at the April Non-Manufacturing Business Activity Index, which was 50.4. This is a decrease of 0.4 percentage points from the previous month, but it still remains above the critical point, meaning it is above the threshold of expansion and contraction. This indicates that the non-manufacturing sector is still experiencing slight expansion and is not significantly affected by exports. The construction industry, which ultimately reflects the strength of policies, continues to expand. The Business Activity Index for the construction industry is 51.9%, Although it has decreased by 1.5 percentage points from the previous month, it is clearly in the expansion range. Among them, the Civil Engineering Construction Business Activity Index is 60.9%, which is an increase of 6.4 percentage points compared to the previous month. This reflects the country's fiscal efforts to increase infrastructure investment, with major infrastructure projects accelerating their commencement. By increasing government investment, it can offset some of the negative effects brought by the contraction in foreign trade. Currently, we are only seeing the numbers for April, so how significant will the impact of foreign trade shocks be in May, June, and July in the coming months? We can look back at the PMI trend after the first trade war broke out in 2018. In March 2018, Trump announced tariffs on some Chinese exports to the United States, which were finally implemented in July 2018, more than 3 months later. Starting from June 2018, the PMI index began to fluctuate and decline, but for several consecutive months, it remained above 50%. It wasn't until October of that year that the PMI began to fall to 49.4%, which was below the threshold of economic expansion. Afterwards, by October 2019, the PMI remained in the contraction zone below 50, even through November. By comparing the situation in 2018, we can anticipate the state of the coming months. It is expected that in the coming months of May, June, and July, our country's PMI will remain below 50. The impact of this trade friction is significantly greater than in 2018. Its drag on the economy began to manifest in April and is expected to continue in the coming months. To summarize, firstly, the Chinese economy is facing downward pressure. The most effective immediate response is investment to support the economy, as evidenced by the significant increase in civil engineering, construction, and business activity indices. Secondly, if the trade war continues, relying solely on investment is not enough. There must be a strong push to stimulate consumption, especially in housing consumption, as it is relatively effective in driving results. Other consumption reforms, aside from short-term subsidies, are long-term measures and will not yield quick results. It is foreseeable that in the future, in addition to monetary easing, the central government will also strongly support the real estate market. Thirdly, ANTI is prepared for a long-term battle. Even if negotiations begin, there is no rush to quickly reach an agreement. Otherwise, significant concessions would have to be made. This is a long-term struggle, a contest of hard power between China and the US, rather than a competition of loud diplomacy. There is a sector with great potential for government investment, which is nuclear power. On July 17th, the State Council Executive Meeting decided to approve the launch of 5 nuclear power projects, including the third phase of the Sunmen project in Zhejiang. This marks the first approval of domestic nuclear power projects in China in 2025, with 10 new units approved this time, and the total investment is estimated to exceed 200 billion RMB. In fact, since 2002, mainland China has approved more than 10 nuclear power units each year for 4 consecutive years, maintaining a regular pace of approving new nuclear power plants. The 3 new projects in Fangcheng, Guangxi, Taishan, Guangdong, and Sunmen, Zhejiang all adopt independent third-generation nuclear power technology, including 8 Hualong-1 units. Nuclear power projects have always been a significant driving force for expanding foreign exchange investment. Based on the investment scale of a single domestically produced 800,000 kilowatt third-generation unit, valued at 20 billion RMB, the total investment for these new units exceeds 200 billion RMB. At the same time, the China Nuclear Energy Association also released the China Nuclear Energy Development Report 2025 Blue Book. The report shows that by the end of 2014, China had 57 commercial nuclear power units in operation, with a total installed capacity of 59.76 million kilowatts, ranking third globally based on the current operating units. However, China has many projects under construction, with 28 nuclear power units being built, totaling an installed capacity of 33.7 million kilowatts, maintaining the world's largest installed capacity of units under construction for 18 consecutive years. The report believes that at the current pace and rhythm of construction, by 2030, China's operational nuclear power installed capacity will reach 113 million kilowatts, ranking first in the world. In addition, China's nuclear power generation is also continuously growing. In 2024, the cumulative power generation of nuclear power units operating nationwide in China is 444.7 billion kilowatt hours, accounting for about 4.7% of the national power generation, ranking second in the world. This is equivalent to reducing the burning of 130 million tons of standard coal and reducing carbon dioxide emissions by 330 million tons. Very impressive. It can be summarized like this. First, since China introduced a nuclear power technology from France in 1994 to build a Daya Bay nuclear power plant, by last year, China achieved 100% domestic production of key nuclear power equipment and autonomous control over key component technologies, marking a huge leap in 30 years. Second, China has entered the era of independently developing and trialing commercial operations of fourth-generation nuclear power plants, reaching the forefront of the world. Third, as a clean energy source, nuclear power is being vigorously developed by China, making a significant contribution to global emission reduction and serving as a major investment to drive economic growth.